everybody. Just coming on 4:18 a.m. over there on the East Coast. European markets are open. They are not doing well, but that doesn't matter because we are waiting for 5 hours from now when the U.S. markets open. So on the spreadsheet that we do all the time, just showing you here how you can look back at Tuesday and we can see bang, 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 bang. 4 green days in a row means absolutely nothing. You can put 37 green days in a row. Doesn't mean anything. What matters is when you see 3 red days in a row. So anyway, like I mentioned, the range has started to compress ever since the inaugural Trump win day, where we maxed out at our 72-point range, which we have not been able to break out of for the better part of, call it 2.5 months, since September 11th, when we had the minus 1% day that ended the day plus 1%. It's a fantastic bullish put credit spread that day. But yeah, we have been in a very tight range for the better part of 2 months, and we are going into OPEX week. So does this mean anything? No, it's simply something for you to take notice of, which, hold on to your eyeballs, because I'm going to scroll really, really fast here. My spreadsheet began when Trump won, back in 2016. You have November 7th being a Monday, November 8th being the Tuesday. Trump wins, markets crash, down minus 5% overnight, halted. The next morning, it took literally, after an 8-point gap down, it literally took less than 15 minutes for us to be green. We wound up closing the session there, plus 23.7 points. Now again, this was the inaugural Trump. Nobody knew what they were going to be looking out for. Nobody knew what to expect. They know now because we've already had 4 years of Trump. But anyway, just looking through the first few weeks of Trump going into the end of the year, I'm just showing you here as a highlight to make note. We had one minus 1% day, and that was the FOMC meeting, middle of December. And then those last 3 sessions of the year, December 28, 29, 30, red, 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 with the biggest down day being that minus 0.87%. And for those of you who were here and remember, that was because we had the massive tech sell-off. Had nothing to do with the markets in general, just tech alone. So just pointing it out, but what we want to focus on is where are we? Where are we? So I'm going to start you off here with the futures. On the futures here, looking at the 5-day, and in red are your gaps. Even though you see it filled, that's the overnight. These are your gaps which have not been filled since last week, with the election being there Tuesday night. Then you had your Wednesday night movement. Nothing really on Friday as far as the ES goes. Dead flat. See your dip here coming in just prior to the open. And Sergio, to answer your question, looking at this for what it is, this is 4:30 in the morning on Friday. This is coming on to 6 o'clock in the morning on Friday. Thus, with this being a very large move to the downside after having reached up at 6,000 and been trolling there, it looked very, very positive that 59.75, 59.70 bearish call play would work out very well on Friday. Very obviously, it did not. As we came into the open here, which was right around here, down here at 6,000, straight on up. Overnight, this is where we are as far as the ES. We've got a tiny little gap to be filled overnight. Down here at 6,022, I believe is what it is, 6,023. We're up here at 60.43. We're 20 points to the high. 20 points, absolutely amazing. So anyway, we are continuing to float to the upside. However, I bring you over here to the NASDAQ. Looking here at the NASDAQ, and again, looking at that big major Friday move to the downside. This, again, made it very appealing to be into that bearish call play on Friday. And then you just floated up and floated up and floated up. Well, here we are on Sunday. This needs to be moved because this is... No, this is... where am I? Anyway. You got a tiny little gap over here to be filled. Tiny gap right over here to be filled from over the weekend. Not being filled at the moment. We are floating up at 21,300. We are up 70 points over here on the NQ. Come over onto your YM. YM after the initial Trump move, absolutely nothing, just floating around all day Thursday, latter part of Wednesday, all day Thursday, all day on Friday until the opening bell. Opening bell kicks in, bam, straight to the upside. Here we are with a tiny fractional gap below the highs from Friday over here on the YM with nothing but floating to the upside in the continuation. Russell 2000, same thing. Come on to your Trump gap. Bang, big gap up. Float nowhere, absolutely nowhere until the opening bell on Friday with your, after having melted down to cool off your RSIs and your upside move there on Friday. Here we have a major move on the upside in the morning. Well, morning for me, nighttime for you guys, your little tiny fractional dip, and here we are producing higher, looking for 24.51 over on the Russell 2000. So again, what does it mean? Bring you on into our charts and look over this for what we're talking about. So again, on the SPX, 5990 is definitely what we are looking for support. This is our support area. What we're looking at on the upside, 6009, we already achieved that on Friday and we sold off. We've got 6039 to the upside. Closing at 59.95, being up 20 points. We are right there at new all-time highs as we get ready to open. The 5-day moving average, the only thing that will be of any significance whatsoever and will be so far out of range, it will not even be to Thursday's lows. So forget about the moving average for the 5-day for now. 59.90 is where I'm looking on the downside. Over here on the VIX, as we typically see on Fridays, on the weekend, a gap up on the VIX. Well, the gap up on the VIX can do what the gap up on the VIX wants to do on a Monday because it absolutely means nothing for us at the moment as we are down here below 1542. The VIX recaptures 1542. We actually have something that we can consider may be possible to see our first tiny dip. As long as we're below 1542, this is a butterfly flapping its wings across this fucking desert over in Africa and weather forecasters in the U.S. talking about a massive hurricane that is created because of it. It means absolutely nothing as long as we're below 1542. Come over onto the QQQ, and again, the QQQ with another gap up and float up to the upside. Like I said, you see here where you have been for the last better part of 2 days. You are not getting down below 510. Your lows over here on Friday morning, 511.50, forget about it. 514, 513 at best. Upside, I can't give you an upside target because I simply just do not have one. Here's your Russell 2000 with your gap up overnight. Gap up filling at 238, 238, 235 was that little window that we traded in for the better part of 3 days. Well, you're above 238. So guess what? 238 is now your support level and your all-time highs. Right there at 244.46. 3.5 points to the upside for the all-time highs, which were created back in March of 2021. Over here on DIA, nothing to talk about at all whatsoever on DIA. Already mentioned it over there on the YM. Sits where it sits. So what I would be watching and paying close attention to is your US dollar and seeing the $ DXY, for all of you who have that ability to watch this, how we have sustained above 104.636. We are starting to embark on that 105.658. And in the event that we start getting that move back up above that 105.50, 105.60 area, I've shared this many, many years, many, many times. When you start getting your dollar rising like this, the DXY, this is when the market always provides you a big pullback. As you see back here in September, late September going into October, the breakdown below 400, 100, testing that 100 bottom and nothing. Back here, February 2023, the top. April 2023, NVIDIA invented AI. July 14th, 2023, the top. December 28th, 2023. Not so much the top because we went into 2024 with euphoria. And here we are now down here. So again, we are starting to break out on the DXY. Be careful. Looking at your TLT and seeing how your TLT is coming down here to the 2009, 2010 support levels at 88.78, which we broke as we sold off into the October bottom of last year. This is a big, humongous, holy shit level right here, 88.78 over on the TLT. So be very aware of this. And for those of you guys over here with your Bitcoin, I had always been a big advocate of 69.70 being your sell area, that 40 area being your major support, which you were never able to make it back down to during the summer course. You were only able to get down to around 52. You supported really well. And now here you have your breakout, breaking out above 80,000. And I have nothing negative to say against you, even though I have nothing to do with Bitcoin whatsoever. All that I can point out for you is be very, very aware. Be very, very aware of 88,213, fractionally above where you are as you sit in your fake paper Lamborghinis, talking about the paper profits that you have in your crypto accounts that you can't close because there's no liquidity, of how 100,000 is coming. So be very careful. I love you all. Some of you a little bit more than others. Have a great Monday. Enjoy the start of your week. Don't force anything. Forced farts tend to shit your pants. And we have a long OPEX week ahead of us as Jerome Powell speaks on Thursday. So good morning. Enjoy your breakfast. See you in the chat room.
If I'm 52 and God blesses me to live another 20 years, that means I got more days behind me than I do ahead of me. I'm not letting anybody waste not one fucking moment of my life. I'm gonna enjoy this ride. And if I need to be alone to enjoy it, then that's what will happen.